Good morning, everybody. My name is
Morning.
Lyndaine, and we are here with Henry Chong, the CEO of Fusang Exchange. Henry,
Yes.
how are you doing today? Or shall I say, how are you feeling today?
I'm feeling pretty good, actually. Woke up really early this morning, which is rare for me.
What time is that?
6 o'clock.
Wow.
And surprisingly, the
early.
Hong Kong sun, I realized, comes up at 6:10 these days. So it's actually not that early, but anyway.
So do you have the window to watch the sunrise then?
Yes, I'm very lucky.
You. I just see my neighbor. All right, great. Well, digital exchange is becoming a crowded market.
Yes.
And with the recent public launch of Fusang Exchange, we would like to have a better understanding from you as to who and what Fusang is and how Fusang stands out from the other digital exchanges out there. First off,
Yes.
can you share your vision of Fusang and how does the launch of the Fusang Exchange fit into your mission?
Look, Fusang has one single mission, and that is to build Asia's first digital stock exchange so that we can do what I call enabling stakeholder capitalism, which is allowing companies to align with their customers, with their shareholders, with their communities. And the single thing that we are focused on is allowing people to create, trade, and list digital assets, but specifically digital shares. And maybe I'll talk a bit about what I mean by that. You know, the term digital asset is very broad. People have taken it to mean things like Bitcoin.
Right.
People also take it to mean things like your airline miles. And it's a very messy term. But I guess what has received most of the hype in the last couple of years has been trading cryptocurrencies. Things like Bitcoin. Things that people, very novel, that people got very excited about, and that people invest in because they're hoping to make boatloads of money overnight, honestly. But what we're really interested in is about taking real world company shares, the shares of all of the companies that you touch and feel every day, and seeing if we can list and trade these in digital format. Now, when I say that, a lot of people say, well, surely the shares of my local business is digital already, right? It's 2020. How can it be that this isn't digital? And that's just not true. We're sitting here in Hong Kong right now, and for private companies in Hong Kong, you must still have physical paper shares. But even where you have countries that have what they call dematerialization, so there's no more physical paper, you just effectively have a PDF, right? If you talk to a technologist, they still call that paper. It's just a picture, but it's not digital. It's not machine intelligible. You cannot transact with it digitally online. And the reason why Fusang finds this so exciting is that most people don't understand just how much machinery goes on in the background to help sort out all of this financial infrastructure. And if we can help take that leap into creating digital native shares, the one thing that we can do is disintermediate a lot of these other people. It means that for the first time, individual investors can invest directly into companies and get back those company shares without needing to go through lots and lots of layers of service providers. And that will give people greater access than they ever could before to a greater spread of companies more conveniently than they ever could have before. And maybe we'll talk about this a little later, but the most exciting thing for me about that is that once you open up the possibility in terms of the kind of companies that people can invest into, companies can start to redefine the relationship that they have with their shareholders. You know, right now, companies have marketing teams that talk to their customers. And that's important because your customers are the ones who pay you. And if they don't pay you, you don't have a business.
Correct.
And then if you're a big public company, you have a separate team, like an investor relations team that talks to your shareholders to keep them happy. And it's like never the twain shall meet. You've got your customers and you've got your shareholders. And they're completely different groups of people. And people always complain that, hey, how come shareholders don't care about the stakeholders of a company? It's like, well, they're not the same people, so of course they don't care. I think that digital assets will uniquely enable companies to start merging those groups of people, where they can say, once I have the ability to allow individual investors to invest in a way that's, again, easier, cheaper, faster than ever before, what can I do in terms of redefining that relationship? What can it mean for how, as a company, I can communicate directly to my stakeholders, and how can I try and turn some of those stakeholders into my shareholders?
You know, that's a very interesting point, because when I talk to small businesses who actually want, say, outside investors, the main problem they see here is the investor relations part. So
no one knows
say,
about them, right?
Yes.
Talk to a bank, you talk to some random investor, especially if it's a private placement. And realistically, you end up raising money from friends and family because they know you.
Yes.
But they don't, honestly, most of the time, they don't even know your business. Your customers are the ones who know your business better than anyone else. They can evaluate the goodness of your business without needing to read a prospectus, right? Your local business, restaurant, whatever, you touch and feel the product every day. And the minute it changes or the service quality decreases, you can tell. Right? And I think that those people who are so intimately connected with a business as its stakeholders are the exact people who should be its shareholders. There is so much disconnect right now. And it's strange to me that in 2020, in a digital world where we accept as a given that all businesses need to communicate with their stakeholders directly and online through social media, we accept that all businesses need to sell directly and online to their customers through e-commerce. But when you want to raise money, when you want to look at the capital structure of your company, the whole other half, you go talk to a bank. Or you go pitch to a bunch of VCs and you say, first, let me explain to you what my business does. It shouldn't be like that, right? The pitch should be, you already are my customer. You know exactly what my business does. If you would like to not only be a customer, but you think my business is so good that you would like to also be a shareholder, let's talk. That to me is how the relationship should work.
That is very interesting. So going back to the crowded market of digital exchanges, how would you differentiate Fusang from other stock exchanges?
Yes.
And also, if you can give us a bit of an idea in terms of how your license is different from, again, the other exchanges.
Yeah. I actually don't think it's a crowded market at all, because we're doing something pretty unique. You know, there are traditional stock exchanges on one side. People like the Hong Kong Stock Exchange, who have listed and traded companies for a long, long time. And then you have the cryptocurrency exchanges trading things like Bitcoin. Again, very, very different purposes. We're focused on something in the middle, where we think we can take the digital platform that all of these digital exchanges have built, the idea of being able to log in directly to an online platform, you know, go through an online account onboarding process and trade directly with this online platform, but do it for real world shares, where we can take companies through potentially a full-fledged public IPO process, so they can be public companies and traded among retail investors, and we can still list real, not tangible, but real assets. The same shares that you would have bought off any other traditional stock exchange. Like I said, doing it in a digital native format, which allows for companies to actually go directly to their investors and their stakeholders. So we have, I guess, a digital platform, but doing very traditional business. And I actually think that's important because, you know, our whole thesis at Fusang is that the underlying nature of what we trade, like shares, that's not changing. The roles that you need in our industry, where you need a real fully licensed stock exchange, where you will need brokers and custodians and audit firms and all the rest of it, I don't think any of those roles are going away anytime soon. What technology will do is it will change the way that we operate, and it will also, I think, change the players that fill those roles. But you will still need people to do all of those individual jobs. And I think that one of the mistakes that I see a lot in the cryptocurrency space is that they're trying to jump from a world where we are familiar about how these shares work, right? We have a lot of rules, we have a lot of regulations, and they say, well, I think I should do that digitally, but I want to do it with no rules. I want to do it with the rules that I've made up. And that's just not going to work. I don't even think it's a good idea, right? The question is, how can we take what we have today and leverage off digital technology to make it better for our customers, right? The end investors. How can we allow them access again to a greater pool of assets in a way that's easier and cheaper than ever before?
Right. Good. That is very insightful. So, although digital exchanges are becoming more and more popular, there's still a lot of people who want to understand who these different exchanges are for, let alone how they can start participating. So, in a nutshell, Henry, who is Fusang looking to help and how?
So right now, Fusang is squarely focused on serving what people call the security token market, what I personally call the digital securities. Where again, real world stocks and bonds, but listed and traded in digital native format. Our industry is a little unique because there's been a lot of hype about security tokens.
Right.
2017 was the year of ICOs, and then that all kind of went away because people realized that most of them were scams. And people said, okay, well, surely the next thing that will come are the same thing, digital tokens, but representing real value, real shares. Somehow that hasn't materialized. There's been, like I said, there's been a lot of hype, a lot of companies announcing a lot of projects. Even I've seen a lot of these security tokens being created, but then nothing happens with them. And we believe that that's because right now, even once you've created these tokens, there is no real way for end investors to access them. There isn't a platform that can allow retail investors to actually buy into these shares in a way that provides them with a real end-to-end digital platform. There are a lot of people in our space who are kind of half-half. They say, well, I've got a bit digital, but I still have underlying paper shares, for example. And I've never quite understood that. They're just doubling up the amount of work. What Fusang believes that we can do, and the one piece of the market we're focused on, is taking these security tokens that are either in the process of being issued or have already been created and providing a platform for them to be listed and traded right now. And we can do that today.
Right. One question that sort of like lingers in me is that cryptocurrency has been very controversial for the past few years. And with digital exchanges, and you have cryptocurrency mixed up with that, and also other digital assets, how will you address, or would you address the qualms of, say, a traditional investor, like going to your exchange and seeing Bitcoin and other assets there?
Yeah.
Would you address that, or they're practically not a target for you right now?
You know, the crypto market is curious in the sense that most people are either bought into crypto or not. Right? I don't understand why that's the case, in the sense that when you go to a traditional stock exchange, you don't buy something because it's a share. You buy it because you say, I think that's a good company and it's got a good business, and this is just the way that I invest in that business. Likewise, there are a lot of different digital native assets, cryptocurrencies out there. Whether or not one of them is a good investment or not really should be dependent on what exactly that thing is doing, right? What can you do with that token? What is the project it represents? What is its utility? And that will determine whether or not it's a good investment or not. I think that the universe of digital assets in all forms, whether these cryptocurrencies or security tokens, or even things, as I mentioned, like your airline miles, can and will expand rapidly, because there's nothing that really, I think, should change about the underlying nature of what the thing is. It's just that we are now jumping from a very paper-based world to a very digital world. And I think that's an inevitability because, hey, everything else in the world is becoming digitized, right? It's strange to imagine that somehow the assets, the way in which we store and transfer value is going to remain so undigitized. You know, right now, never mind cryptocurrencies, if I want to transfer money from a Hong Kong bank to a London-based bank, it takes at least 24 hours, right? It's overnight. It's quicker for me to put cash in a suitcase and fly to London than it is to do an interbank transfer. That's very, very strange. And it's like that because things are not as digitized as people imagine. So I am convinced that within the next few years, more and more assets can and will become digitized. Whether or not that asset is a good asset will depend on what it represents.
Right. So in relation to what you said, I know that there are a few research companies such as, say, Morningstar, who are looking to sort of uniform the data format
Yes.
of digital assets. What's your take on that? Do you think that's sort of like the key thing that will really help digital assets take off in the market?
I think it's one of the things.
Yeah.
I think it's an essential service. But like I said, I think we will need all of the existing roles that you see in the financial market today need to exist for digital assets. Otherwise, this industry is not going anywhere. You will need, as I said, brokers, rating agencies, insurance companies,
Right.
and auditors, and custodians, and exchanges. You need all of it. We're very, very focused on just one slice, right? We want to provide the platform and the marketplace to bring a lot of these players together and provide a venue where investors, again, can list and trade these assets.
Right.
We're also very clear that it is not our job to build that whole ecosystem, right?
Right.
We need people like the Morningstars of the world to come in and help provide that very essential service. And we need all of it to happen together, right, for this market to really take off.
Got it. So I understand that you're already working with a number of strategic partners and exchange members.
Yes.
Can you tell me a bit more in how they add value to the Fusang ecosystem?
Yeah. So like any traditional stock exchange, we have what we call exchange members who provide a number of very valuable roles. Two kinds primarily. We have what we call listing sponsors. And just like any other exchange, if a company wants to go through a full-fledged public IPO process, we require that they engage a licensed listing sponsor whose job it is to prepare that company for the listing, who understands our rules, our listing rules and our requirements, and can take that company through that process. And most importantly, does due diligence on that company and can underwrite to potential investors that what the company is representing is actually true. So if a company says, hey, I own 10 buildings in Hong Kong, we want that listing sponsor to say, I've seen those 10 buildings and I can verify that they're there, right? Because what we care about most as an exchange in terms of the listing of assets is transparency, right? We think that digital will uniquely enable a much greater pool of assets to be listed than ever before, right? Just because you're a company with X amount of revenue doesn't make you a good company or a company worthy of investment. But what is important to us is that whatever you're claiming as a company, whatever you're selling your company on the back of to your potential investors is actually true. You're not claiming or representing things that are not real, not there. So that's one kind, the listing sponsor. And then on the other side, that's I guess the supply side, right? People who come bring these issuances to our market and create these companies. We need the demand side as well, right? We need investors to come in and actually want to trade these things. And we don't imagine that all of that flow will come directly through us. And that's why we need trading agents that we can work with who already have these pools of investors who can plug into our system and can also provide a very useful role in terms of sitting on the side of the investor, of advising the investor. Again, that role of an investor coming to a broker and saying, hey, what do I buy? I need someone to advise me out there. Yes, Fusang has provided this valuable platform and mechanism to let me do it, but should I buy company A or B? Again, that job of advising investors and helping them decide what to buy, that's not going away anytime soon. So we have those two formal exchange members, those are actually regulatory roles, and those are technically licenses that we issue to those exchange members. But beyond that, we need, as I said, the whole ecosystem of partners.
Of course,
we need law firms and audit firms and accounting firms to come in and do all the same roles that they would do on any traditional IPO or listing. The only difference, as I said, is that number one, upon listing, we will have created digital shares that is just so much easier to transfer around than ever before. And number two, we can allow investors to actually log in directly to our platform if they want to and trade directly on our platform without having to go through a traditional broker or have to go through a very paper-based route. Right now, if you want to trade on the Hong Kong Stock Exchange, you find a traditional broker, you fill in some forms, you wait a few weeks, etc. And I guess as an aside, and something that's really interesting with what has all been going on around us recently with COVID, is that it didn't seem so hard even 6 months ago to go talk to some of these brokers, sit in front of them, do face-to-face account onboarding and fill in some paperwork. And we've suddenly been catapulted into this digital world where we are forced to be fully digital. And I think one of the most interesting things about this it's shown very clearly which companies or which what kind of infrastructure is really not as digital as people thought.
Correct. Is it safe for me to say that the number one benefit on listing or participating at your exchange is basically the legal framework and legal protection it provides to all participants? Is that right?
I think that's table stakes.
Right.
To me, that's a necessary but not sufficient condition. Surely, any platform that is helping companies go public, that is taking investors' money and matching them into those companies, should be licensed and it should be regulated and it should make sure that it is doing business above board and looking out for the interests of its customers and its stakeholders, like any other company. To me, the number one benefit that we do beyond that is we can uniquely enable that marketplace to match, again, investors and companies. And we can do it in a way that is fully digital and fully online. And we can do so in a way that can support full-fledged public companies and public investors or retail investors. Because that's another thing that I've seen a lot in our industry, where people have created digital shares in different formats, but for a variety of reasons, they're not very accessible. And what's the point? The whole point of digital is supposed to be that it is more accessible to a bigger group of people. If it is harder to use or more expensive or slower than traditional assets and traditional way of recording them, nobody's going to care.
May of 2019, HKMA released 8 licenses for virtual banks. In Singapore, they're doing the same, and I think they're hoping to give that licenses by middle of this year. But obviously, we have the COVID situation, so I don't know how that's going to change. I think Malaysia is doing the same, doing in the same trajectory. Do you see Fusang integrating to these virtual banks? Do you think there's a possibility? Because you were just talking about accessing this different markets, right? So obviously, whoever is going to sign up with this virtual bank, challenger banks, or whatever you call them, are basically digital savvy people. And
absolutely.
what I want to see also is just how did this, new generation of banking different from the traditional way of banking. So I could imagine offering, say, services like Fusang, where it gives them access to digital assets. I mean, what's your take on that?
I'm very excited to see this plethora of digital banks everywhere getting set up, precisely because I think people are realizing that there is huge benefit to a digital native platform. To answer your question earlier about like what does Fusang do, how are we different from whatever else comes before. Look, Fusang is to traditional stock exchanges what the digital banks are to traditional banks. We do the same job, but we do so in a way that is radically different, right? Different customer base potentially, but just the way in which we provide services is going to be very different. And that's why I'm so excited about these digital banks, right? I think they will be able to provide access to a whole group of people that really didn't have access to these kind of banking services before, for one. And we're very keen to explore how we can integrate with these banks.
Digital cash. Since we're talking about banks, I'm just curious. And I've been listening to this podcast where, China is looking at, or I don't know if they've already distributed digital cash, but they're also sort of like pairing up with a telecom company. So in general, it sounds kind of scary because the telecom company basically knows what you're talking and doing and all that, and then you mix it up with digital cash. So obviously, the government kind of knows like what your movements are, so it could be quite limiting, right? But on the other hand, obviously it provides convenience and new way of basically doing things. Again, what's your view on that?
I find digital cash very interesting, not least of which because of all cash is digital already, really.
Right.
I answered this conference a while ago, and I remember someone stood up and said, I don't believe all of this digital asset stuff and digital currencies. I like to keep my money in a traditional bank where I know where it is and I can touch and feel it.
Right.
I'm not sure you understand how banking works exactly, modern banking. Look, I mean, real physical cash and coins in circulation in any given economy, what economists call M0, is usually no more than 1% of total cash outstanding. The rest of it is just a bunch of line items in databases, right? Sitting in a bank in a virtual account. And the only difference between that kind of digital cash and blockchain-based assets, the kind a lot of central banks are exploring, is that instead of having the records of where this money sits distributed among a lot of different databases, where right now most central banks have no clue where the money is and who owns what, where, and that's why whenever we have a financial crash, there's always this panic because they have no idea how much money a bank has really and who it owes, and it's got to go figure it out. And all they're trying to do is move that to a system that is blockchain-based so that they can actually trace it centrally, right? As a central bank, in every country in the world, they have full control over the money anyway. So all they're trying to do is to make these things more transparent,
right.
Easier to transact, and do so in a way that, quite frankly, will make money laundering checks a lot easier. So I think that central bank digital currencies are an inevitability, right? It's just a question of who will move first, how far along technology is. I think China will certainly be one of the first few countries, if not the first.
Right.
But even recently in America, with the stimulus package they were talking about, the transfer payment as part of the COVID release package, was how exactly do we get this cash into the hands of every single American? Right? You can write them a check, but I think each individual is supposed to get $1,200 US.
Yes.
And I was just thinking, man, you issue 300 million checks, what percentage of that money is going to get eaten up as just admin cost?
Correct.
Right?
Yes.
So there were some very serious proposals to look at actually creating digital wallets for every single American at the central bank window, the lending window, and allowing those end Americans to access cash literally directly with the central bank, which didn't happen. But I said sooner or later, within the next few years, that can and will take place.
Right. The image and the message that you're conveying or trying to convey to the market are paramount to brand recognition. How do you want your incumbents to see you? And also this same goes to the other fintech firms in Hong Kong, Singapore, Malaysia, where you currently operate, and even globally.
Yes. So we're trying to do just one thing, which I guess is a big enough task. Right? We're trying to run the first fully digital stock exchange, at least here in Asia, for digital assets, for real digital shares. And we want to focus on just that one thing because it is hard enough, and because I think that it's our job to run a clean and regulated marketplace in the middle. And what we're trying to do is to build up a whole ecosystem of partners around us that we can work together with. We're very keenly exploring partnerships with a whole bunch of other fintech and traditional finance companies to fill all of those roles that I've been talking about, so that together we can provide end investors, individuals, with a mechanism to take their hard-earned money and actually invest it into companies that they know about, brands that they actually use and love. Warren Buffett, of all people, says that is literally what you should be doing with your money, right? Investing in your circle of competence. Find things that you actually know about and invest in them. Don't just invest in some random company you've never heard of before because some broker has put a prospectus in front of you. And I think that if we can enable that marketplace, it will allow us to transform the relationship that companies have right now with their stakeholders, where it's no longer a question of how do I sell things to my customers, how do I raise money from my investors, but more about, hey, a company is just a fictional construct, right? There are these things that we have created to draw together these value networks of our stakeholders. We have suppliers, we have employees, we have customers.
Right.
We need to add value to all of them and keep that whole network working together and happy. And if we do that, we have a company. And I think that companies can and should sit down and think long and hard about, hey, if I could digitize my shares, how could I redefine that relationship between all of my stakeholders to bring them in tighter together, to build these communities that add value to everybody. And I think that if we can pull off that objective, we'll do just fine.
Do I have to be an accredited investor to participate?
It depends on the kind of issuance.
Right.
And it really depends on the company who's raising the money.
Okay.
Some companies will want to go through a full-fledged IPO process where retail investors will be able to buy those shares. Some companies will say, you know what, I'm not quite ready for that just yet. I want to remain as a private company and I want to do a private placement, in which case, yes, those investors do need to be accredited.
Right.
So it is up to the company. But even in cases where they're looking to do a private placement, I think that right now private placements are done again to sort of friends and family that I kind of know locally because it's very paper-based. Once we can digitize that whole process, and if we could allow accredited investors from all over the world to invest in your company, the way that if I ran a small business and was selling something online, I just need, it doesn't have to be local anymore, it can be global. I think we could do the same thing for private placements where we dramatically expand the pool of who could invest.
Clients can trade Bitcoin and Ethereum on your exchange.
Yes.
What other currencies will you support and when?
We're looking to support a large slew of potential, both traditional and digital currencies. A lot of that is demand driven, right? As and when there is real interest and value in some of these things and we're confident enough in them, we will list and trade them. But honestly, we view all of that as a currency. And we want to support these currencies because we want to provide flexible mechanisms for people to invest in and out of the companies and securities that we're listing. That's really what we're most interested in because that's what I think people should be investing in with their hard-earned money. Currency speculation is for professionals, right? It's a business all on its own and a valuable business. But the average person shouldn't be trading in and out of Bitcoin any more than they should be trading in and out of US dollars.
Correct.
Right? They should be buying these things with a view to holding them potentially for the long term. And I think they should be doing the same for companies, right? They should say, hey, I have money. There are a whole bunch of companies that provide me services that I touch every day. I like them enough to pay them some of my hard-earned money. Hey, if I like them that much, maybe I should also invest in them. Right, where I have a direct relationship with them and I know what kind of business that they're actually running.
Right.